How does the top 1% people in the world invest? And by 1%, I mean the people who have the cream of wealth, abundance of wealth.
What I've observed is money makes more money, right? And if you have money and if you are investing and just keeping aside all the noises around you, that's when you can create wealth. So, wealth creation is all about patience, and it's all about making sure that whatever that you are investing is backed with a purpose, and that's how the compounding works, and that's how you can create
Okay.
more money. And at the end of the day, it's not about managing finance, it's about managing the psychology of client when it comes to money.
Okay.
So that's something which you try and learn, or that's something which experience teaches you in this industry.
Right. So let's say if I have a lump sum money, let's say about 5 lakhs, and I want to invest in a particular portfolio or anything, real estate, gold, anything that can double it within 1 year. As per your experience, what would be the best option?
Well, for a situation like this, I would first like to educate client that nothing doubles in 1 year.
Okay.
Okay. Only thing that would double is you maybe visiting a casino and gambling on that money.
Hi, this is Muskan Puri, and I'm your host at Winning Brew Podcast, where we brew fresh, bold, inspiring stories just for you. Before we dive into today's episode, make sure you hit the subscribe button so that we can continue to bring such fresh, bold stories for you every time. Thanks and enjoy the video. Hi, and welcome to today's episode of Winning Brew Podcast. So, for today, I thought that, the topic of finance really hit my curiosity in the past few months. And, when I think about finance, I thought about why not bring the finance guru on our podcast who can help me clear some of my doubts and hopefully make an impact of financial subject on all of you. So, may I introduce you all to our guest for today, Mrs. Manalee Verneker, who is the founder and the CEO of Financial Wisdom. I will not talk much about her company or her personality because I'm sure that as we proceed towards this episode, you will find out why I said the word financial guru. All right, so let's start. Hi, Mrs. Manalee. How are you today?
Hi, Muskan. I'm doing well.
Okay, great. So, may I ask what sparked your interest before you entered the finance industry?
Well, so right from the childhood, right? So what I've realized in terms the way we grew, whatever you do in life, it could be you study for engineering, you study to become a doctor, or you would like to do something of your interest. One thing that was never covered is, your journey with personal finance. So, finance is something, or money is something which was never taught to us in our late school, our college life. They prepare us to earn well, but they don't prepare us, after earning well, how and when are we investing, and how important it is for us to invest. So that was something which led to my curiosity, considering me coming from Mumbai. Well, I lived in Mumbai all my life, and I just moved to Goa last 10 years, 10, 12 years back.
So, can you tell us what sparked your interest in finance? Because many women, professionals are not as much into finance as there are men out there. So, you being a female entrepreneur and you chose the finance subject to dive deeper into. So, why finance and how?
So, finance was something which was always closer to my heart, right from my journey in personal finance. I have done my graduation in financial markets from MMK College in Mumbai. And when I was learning, what I realized is, whoever you are today, you could be studying for your medical field, you could be studying to become an engineer, or anything that you pursue. One thing that always lagged behind was, a subject called as how do you manage your finance, money. So, For me, starting my journey in personal finance inspired me so that, I can maybe bridge that gap which we had. And today, in last 12, 14 years being into this industry, it's very it's very interesting and motivating to understand individuals, their journey with finance, and also try to educate them on how they can maybe even a smaller difference or even a smaller impact of or a smaller step that they can take into their personal life or into their personal finance life can help them create volume. So that's one of the inspiration for me to choose this journey in personal
Subject.
finance. Yeah.
Is it difficult to convince people at the start to start investing?
So personal finance or investing is all about trust, right? It is difficult. In fact, when you start, it is difficult. It was difficult for me also because I honestly worked in Bombay for like 9 years before I moved to Goa. And in Mumbai, there's a lot of financial literacy. So in fact, I started my investments when I was hardly 18 or 19. I started my first investment. I have seen a huge gap in a metro city as well as, coming to a tier one, tier two city. It's all because of, I could say literacy. So that was one thing which I thought when I moved to Goa, I need to spread literacy as much as possible. So we started conducting a lot of awareness, sessions, a lot of camps in school, colleges, corporates to build financial literacy. And that's how, when people start listening to you, when people start seeing you much often that's when the trust comes in,
Okay.
and once someone spends that time with you, and that's when they realize, and that's how the journey begins.
Right. You said you started at the age of 18, 19. Did you start earning back then?
Yes. So as soon as I got graduated as a I did my bachelor's in financial markets from MMK College in Mumbai. As soon as I completed my graduation, I think before even my final results were out, I got my first job in quantum mutual funds back in Mumbai, Nariman Point. So my first project or my first designation was as a relationship officer, wherein I started my journey in understanding personal finance, understanding mutual funds as a subject matter, and yeah, that's how I started into this industry. And simultaneously, I was pursuing CFP. So I did my certificate. So I'm a certified financial planner from Financial Planning Standard Board US. So the moment I finished CFP, I pursued my CWM. That's again a charter degree into wealth management. So that literally gave me a lot of idea about managing wealth in India as well as you know investing it into investments which are available in different other cities as well, or even other countries, cross border investments
Okay.
basically. Yeah.
So like you said, you worked with another firm and you might have gathered experience from that. What is that one thing that finance companies never want to reveal or share with their clients? Is there something of that sort?
Well, no, what I would feel is any finance company that you go, in fact, when it comes to personal finance, um, and when you're qualified as a certified financial planner, or when you have a recognition along with your basic graduation, you know how to handle a case, or you know how to handle a situation, or you know how to handle a client. Because I must have dealt with more than I don't know how many thousands of clients till today, but every client has a different story. Every client speaks different. Every client's requirement is different. Their journey is different. And well, at the end of the day, it's not about managing finance. It's about managing the psychology of client when it comes to money.
Okay.
So that's something which you try and learn, or that's something which experience teaches you in this industry.
Right. So let's say if I have a lump sum money, let's say about 5 lakhs, and I want to invest in a particular portfolio or anything, real estate, gold, anything that can double it within 1 year. what as per your experience, what would be the best option?
Well, for a situation like this, I would first like to educate client that nothing doubles in 1 year.
Okay.
Okay. Only thing that would double is you maybe visiting a casino and gambling on that money.
Mm-hmm.
Because see, what is important is, well, we get a lot of clients who have these kind of questions. What is important is to understand um, few things. Okay, first thing is, what is your financial goal? You need to define your financial goal. uh, it could be, you need this money to maybe after another year or 2 years or 5 years, maybe to buy a car, to buy a house, etc., etc. It varies. Another thing what is important is to understand is how much time do you have, in
Mm-hmm.
order to grow this wealth. And third thing is, what is the risk that you can take.
Okay.
So, say if you have 1 to 3 years period, then definitely you should be investing into something which is very conservative in nature, which do not have any kind of volatility. So it could be maybe, FDs could be the best option, fixed deposits, because it's more about savings and protecting your capital. Or it could be doing some bonds, corporate bonds are even the better options, which have a 3 year maturity. Or it could be low risk funds like mutual funds. There are dynamic asset allocation funds, conservative fund. The whole idea is to protect your capital,
Okay.
right? Now, if you have a timeline of say 3 to 5 years or 3 to 6 years, that is when you can kind of diversify your risk, invest some sort of amount maybe into some allocation into commodities. Gold and silver is something which is doing really well, since the war and since markets are volatile.
Yeah.
um, Investing it into something mid-range or a moderate risk fund. So, well, it all depends on client to client. It all depends on your goal. It all depends upon your understanding.
Right.
See, because something which might suit you may not suit another person, right? And if you are very sure that you don't wish to have this, you don't want to have this money next, say, 5 years and above, then you can consider investing it into direct equity or maybe some aggressive funds. Yeah.
Okay. So, just carrying out on what you just said, direct equity, aggressive funds. So, some of our viewers might not know in detail about these terms. So, if you had to explain these financial terms to a 9-year-old kid, how would you explain equity or direct equity, mutual funds, and any of the term that you mentioned earlier?
Okay. So,
We can start with direct equity.
yeah. So, in today's scenario, right from what shoes you wear, where do you drink coffee, which car you drive, each and every company is backed and it's
Sorry.
listed on stock exchange,
Mhm.
right? So, so for example, if you have a bank account with HDFC Bank and if you're taking a loan from HDFC Bank, the interest that you pay grows to the profitability of the company. So if you drive, say, Maruti Suzuki, it adds up to the sales of the company, right? So right from what you eat, what you wear, which I mean, even in terms of which car you drive, everything is backed and it's listed on the stock exchange. These companies are listed on the stock exchange.
Mhm.
So stock exchange is nothing but a platform wherein if you're buying, somebody else is selling. Like how we have Myntra, Amazon, in a similar way. So now for an individual, okay, if you are a complete layman and if you do not understand which stock to buy, when to sell, how that portfolio has to be, whether HDFC Bank is good for you or say Tata Motors is good for you. Okay, if you do not have that expertise, then mutual fund is a route for you because there is a fund manager who does this entire research. Just like you, collectively, there would be more, maybe 100 people putting in that money that is invested into stocks and securities, and the returns are generated back and given it to you as an individual.
Okay.
But if you feel that, okay, you have that expertise, if you have that knowledge, then you can directly invest by opening up a demat account and buy equities.
Okay. So now, again, a
Yeah.
very dumb question, but I will still ask. If you had to say about equity and like I have no knowledge about it, just one sentence, simple, what is equity?
So, when you invest in equity, it's like you become a part owner of that company,
And then how is it
in
different
terms
from
of
shares?
shares.
Okay.
So equity is investing it into shares, basically.
Okay.
Okay.
Is it different?
That's
Equity
called
and share?
direct equity.
Got
Okay.
it.
And when you buy, what you buy is shares. When you invest in mutual funds, you get units.
Okay.
When you invest into companies, when you say direct equity and shares as something, it's the same term basically.
Oh,
Yeah.
okay. And mutual funds is a collection of different
Collection
firms
of
and you invest
collection
into
of
them.
different
Right.
equities. Yeah.
Okay. So as per you, what is safer, FDs or mutual funds?
Again, it depends on your tenure. Okay.
Let's say 5 years.
Now, FDs is majorly recommended for clients who want to kind of have an emergency fund or an emergency corpus, so that in case if some emergency comes in, you don't have time to sell that. Because any investments done into, say, mutual funds, it takes 2 to 3 days for liquidity per se. So, generally, as a thumb rule of personal finance, what we educate our client is to have minimum 6 to 7 months of your fixed expenses parked into a short term FD or maybe a liquid fund, okay, which is easily accessible in case of emergency.
Hmm.
Because there could be different scenarios in life. It could be maybe if you've lost a job, if you're moving from one place to another, or God forbid if something happens, and if you don't have that kind of an income coming in,
Yeah.
okay, especially for salaried or even if you are having a business. So having a contingency fund plays a key role. That's basically something which you should think of even before starting your investments,
Hmm.
right? So 5 to 6 months is basic thumb rule. So that's one thing. And if it is beyond that, so if you feel that you have 5 lakhs in your account and you're okay taking risk, then we would not suggest you investing it into say fixed deposits. The major reason is inflation. So inflation is nothing but a rise in the price of goods and services, as the definition what we've
Yeah.
already heard. But in a layman's term, the value of today. So basically, if I have to buy tomatoes today, and if today the cost of tomatoes is say 100 rupees a kg, say after 3 years, 100 will become 130, because of inflation.
Yeah.
But money lying in your fixed deposits, they hardly beat inflation. So at the end of the day, you may have to put more to have the same sort of
Okay.
expenditure.
Yeah, that definitely does make sense. So, what do you think when people start earning? तो ऐसी वो क्या गलती है that हर कोई करता है just from the time they start earning in respect to their finances, because you have dealt across with different people.
Correct.
तो आपने क्या ऐसा observe किया है?
I think one of the biggest thing what people fail or the people delay is delaying their investments.
Okay.
Most of the time there is a myth that I will only invest maybe if I'm earning an X amount, or maybe my salary is not enough, or it could be different things. Or generally what happens when you suddenly start earning, you want to buy all fancy things, maybe you want to buy the best gadget or invest into something which is not required.
Hmm.
Okay. So one thing that I would really advise, or one thing I would really clarify is, as your investment journey should begin as soon as you receive your first paycheck, you know and it can be as low as 500 or 1000. You need not be earning in maybe having a big packages in corporate. It could be you start as low as 500 or 1000, so that you get that discipline towards
Okay.
starting
So building
early.
discipline is important, even
Yes,
if you're not earning that much.
correct.
Yeah.
See, how much you invest doesn't matter. What is important is how much when do you start, and as far as you start early.
Right.
Because looking at current generation, it's very difficult to find someone who wants to work till 60. I
Yeah.
meet clients and they want to always say that they want to retire maybe in their mid 40s or early 40s. But that's only possible when you start early.
Hmm.
So if you don't start early and you even start maybe if you delay it in your 30s, you don't have that much time to compound or kind of build wealth. Yeah.
Okay. But what would your advice be to someone, let's say, who is in college and who's not really earning but hardly getting a stipend of 5,000 per month to spend on? How can they start investing or grow their money?
So we also have clients, since we conduct a lot of sessions in colleges, and we have given a lot of sessions for students as well as for, yeah, the ones who are pursuing their studies. Generally, every parent gives a pocket money to their child, right? But if you try and educate your child, or even that case, educate yourself, and even if you start as low as 500 rupees, 500 is nothing today. If you visit Starbucks, just for one coffee and food, it's more than that, right?
Yeah.
So even if you consider starting as low as 500 per month,
Yeah.
being in your college as a part of your pocket money, that really helps you in building discipline.
And what would they want to invest in?
You can start uh, SIPs in mutual fund.
Mm-hmm.
There are few funds which start with even 500. There are few which starts with as low as 1000.
Right.
So starting in equity markets early is the key, because that much time you get in compounding your wealth.
So, what I just want to summarize something for our viewers. So, there can be different types of investment, but primarily, in order to ensure that you have a safe backup that you can liquidate at any point of time, it's important to have an FD in some
Correct.
amount, because that can be
Correct.
like an
Correct.
instant
Yeah.
relief.
Yeah.
And for a longer duration, you can have either mutual funds or certain stocks or bonds and so on. Yeah.
Correct.
What's your take on real estate and gold? Because that's something like every Indian has a dream or a desire to invest it at some point in their life, and their returns are, what I've seen is like it shoots up, and I don't think they've ever gone low.
It depends again, your situation in life, right? So now considering Goa as a city or as a state, Goa is already as a Goan, you already have a lot of land and gold, being that as the primarily investment. What you don't have is maybe having something liquid in nature. So that's when identifying, asset allocation plays a key role. So we tell our clients not to have more than 30-40% into real estate. Why? Because in case of an emergency, it's difficult to liquidate your land, or, overnight sell your shop. And in
Okay.
that case, you might even not get the amount or the value for it. So again, depending on, your situation in life, generally we tell our clients to, if you're planning to buy something residential, okay, um, if you're planning to invest in a residential property as an investment per se, then you better don't invest, because the yield is very low. Residential properties don't grow more than 5 to 6% on a yearly basis. Plus, there's a lot of maintenance factor with it. You need to spend a lot of money in terms of maintenance.
But you can always rent it out, right?
Yeah, but even again, if you try to rent it out, depending on how much yield that property is going to give you. So on an average, if you have to buy an average flat, say in Goa, is nothing less than, in a good society, is nothing less than 1 crore, 70 to 80 lakhs or 1 crore, right? How much rent will you have to pay? I mean, how much rent will you get
20,
on that
30.
property? 20 to 30. So 20 to 30, even if we consider, say, 25,000 or a 30,000, that's just 3.6% yield on a yearly basis. Plus, you're paying on the EMI. So you're giving out to the bank, and by the time you finish the tenure, your 1 crore property must be 1.5, considering the principal as well as the interest. So calculating these minor things is very important, because when it comes to real estate, an average Indian is very emotional about it compared to any other form of investments. So again, depending on where you are, where you're standing today, and again, at what time in life you may need that liquidity, that could be your core factor in deciding where you should be investing.
Okay. Because I see majority of the generation before us, before Gen Z, they invested in certain properties, and after they are done with their job, now they're enjoying the rentals coming out of it, and that really brought them the the confidence to retire. That was just one part of it, but many people in India are recommending investing in real estate and enjoying the
Yeah,
rentals.
it is, but it again depends on your liquidity factor, right? Because real estate is something which is quite illiquid in nature.
It is, yeah.
Yeah.
But if someone doesn't, they have enough of money for their contingency and want to invest, then you would recommend
Yes,
real
yes.
estate
Why
over.
not? Why
Yeah.
not? Yes.
And in terms of diamonds, would you say it's a good investment?
So generally, we don't recommend diamond as a form of investment. Again, diamond is something which be is a part of luxury
Yeah.
and not a necessity.
And it doesn't grow in
And it
price
doesn't
because of
grow.
lab grown diamonds and so
Forget
on.
growing. There is always the value depreciates at the time of withdrawal.
Right.
So if you have, say, a diamonds worth 10 lakh rupees, and if you have to go and have a liquidity, you will not get more than 60 to 70% of the value.
Mm.
But women love diamonds, right? So it again depends. It's a part of luxury. So that's not something which you can trade.
Okay. So even though it's depreciating, it would never increase, but
Yeah.
it's something people can spend
And
on.
the diamond markets have really fallen since the lab grown market have
Has
come
come
up.
into play,
Yeah.
right? So when you started your business, when you founded your company, what were the hard lessons that you learned in terms of money management that you wish that you could have known some like back then or sooner, and you want to share it with the audience that can help them when they are planning out their venture?
See, I think for any business per se, what do you need is consistency, time, and patience, right?
Hmm.
These three are the core philosophy when you start or when you intend to plan your own venture. Because you need to have patience enough, because nothing happens in a year, nothing happens in 2 years, because initial time is all about branding your brand, earning that trust. It again depends on what nature of business you are into. When it comes to personal finance, until and unless you don't show up, you don't kind of be there consistently into the market, it's very difficult for someone to come to you in terms of giving you that kind of insights on why they need to trust you with their money.
So building your brand, building
Building
trust,
your
having
brand,
patience.
correct.
Yeah,
Patience is the key,
key.
because most of the times we've seen a lot of business owners exit uh, after they complete 3 years, 4 years, 5 years, thinking that nothing is happening. We've seen a lot of cases. I've seen a lot of my clients, who are into business. They get into a business, but they could not pursue further because they feel that the business is not doing well.
Hmm.
But patience is the key.
And what do you think they lacked apart from patience?
Consistency. Patience and consistency is something which is like a backbone for any business, because there are good times, there are bad times, and business always is into cycle. Your first 4 5 years basically builds your base,
Hmm.
and that's when you scale up.
Okay. Did you ever make a mistake in finance? And what did you learn from it?
See, when it comes to, it's not about mistake, but it's all about understanding, um, maybe where do you stand today. For most of now, you are asking this in what per se?
Like a financial decision, did you ever make a mistake in your financial decision, which could have been that you wanted to have more experience, but at that time, since you did not know in depth about it, or something that just happened, because we all make mistakes in our profession and we learn from it. So any one of the time where you realized, okay, this is a mistake and I need to learn from it, and what was, and in terms of finance?
I think honestly, no. Especially in my journey, I was very particular when it comes to even beginning of my journey when I was working. I Since I was working in Bombay and I didn't had much of expenditure, 50 to 60% of my salary used to get into savings, and savings used to then move into investing. And one of the biggest lesson that I have learned, I would say, is I have invested a lot back into myself in terms of education, in terms of upgrading, in terms of learning different verticals, which then kind of helps you as a business owner today. It even helps you when you are an employee, okay,
Mm-hmm.
because it uh, builds that skills in you,
Yeah.
and that's how you can differentiate between yourself and maybe your colleague
Okay.
who's sitting in maybe into the same room.
Yeah.
And moving forward, that is what has really helped me in terms of setting up my business as well as scaling for last 5 years now.
Hmm. Many women are comfortable in working for or under someone, and there are very few that have the courage to come ahead and start something of their own. So, did you always know that you're going to do something of your own, or your journey somehow just led you to it?
So I think I would say that I became an entrepreneur because Goa happened. Well, when I was in Mumbai, my first project was with Quantum Mutual Funds. As soon as I proceeded and I completed my CFP, I was working for another company called as Financial Hospital. We had a tie-up with 250 corporates in terms of, we used to conduct a lot of sessions in terms of creating financial literacy, right from Reliance Industries, Infosys, JP Morgan, etc. So there I had a lot of exposure in terms of managing clientels who were earning 50 lakhs, 60 lakhs and above CTC. So I was almost at the peak of my career. And when you know that you have a lot of kind of, what to say, I'm not getting the right word. I think when you have a lot of exposure and a lot of projects that you can work on, especially in metro cities, you don't think taking another step of starting something of your own.
Hmm.
But as soon as I moved to Goa when I got married in the year 2018, one thing that I realized was there was a lack of financial literacy. And that was only possible if you could create an impact. So just to create an impact is where I started Financial Wisdom in the year 2018, and today we complete 5 years
Oh,
as
wow.
I'm talking to you now. So
Congratulations.
yeah, so that's how it began.
Okay.
And in last 5 years, honestly, we have conducted more than 50 to 60 sessions in different school, colleges, corporates. We started with students.
Yeah.
We even visited most of the colleges. We've conducted sessions for them. In fact, we have a lot of interns who have their internship, especially summer interns, every year. We teach them on why is basic financial planning important, difference between savings and investing, why do you need to
So you
save.
help spread the knowledge
Yeah,
and
so
raise
that's
the awareness
that's
because
how.
that is much needed.
Yeah, so
Yeah.
that's how I started because that is what I saw was lacking in Goa.
Yeah.
and uh, and yeah, that's what we keep continue to do
To
in
do. That's
future.
great.
Yeah,
People think Goa is just about tourism, but what I think many don't see is the people who live here. There are so many opportunities, and it's so beautiful. It's beyond that. So
correct.
I'm so glad that you saw the potential and where you had to make an impact, and you just went for it.
Yeah,
Many women get scared and they always think about the perfect time, but I believe that never comes. You just have to
correct,
start today.
correct.
That is amazing. What would your take be on women? Should they be financially independent or not?
Well, I would say that whoever you are, whatever you do in life, it could be either you are financially independent in terms of your earning, learning, or if you're married to a rich husband, or if you've inherited wealth from your family. What is important to be financially independent. And financially independency is not just that you start earning, you also start taking control of your finance. Most of the times we've seen women earning, like,
Mm-hmm.
and in this generation most of us would want to work.
Yeah.
It's very rare to see someone who is not working, okay, or who has quit working,
Yeah.
though there are, maybe depending on that scenario. But what happens when it comes to women, there are a lot of crown that you undergo. Like, firstly, you are a mother, then you become a wife, you're a daughter, you are an employee, irrespective. Even when you are financially independent in terms of working and earning, but still, we have seen cases wherein you are dependent on your spouse or for your father when it comes to taking decisions, you know. So, understanding basics of savings, investing, and taking control of your finances is very important
Right.
for
Or
for
you'll
in
always have
for
someone making
everyone. Correct.
decisions on your
Yeah.
behalf.
Yeah.
That is really true. And what would your message be to the parents out there? How can they instill the habit of savings in their kids from a younger age, or a little bit of financial literacy? Is there something that you have tried personally that works on kids?
Well, recently had a session for the Gera school, and I could kind of conduct a session for students of 8th, 9th, and 10th. And the amount of enthusiasm and the amount of literacy that you see with them is very difficult to find in corporates in today's world. The amount of questions that was coming after the
Like
sessions
what?
was really good. So
Would
what
you
I
share
would
some questions that the kids asked you?
lot of questions in terms of basics, but at least they had that kind of energy in terms of standing and wanting to know, so the curiosity was really good.
But what would a kid ask about money? Because when I was small, I mean, or we were kids, we were least bothered.
Exactly. So
Yeah.
that's where. So, see, what is important is the exposure. What is important is, as a parent, what conversations you have with your child.
Yeah.
So, today I have a son who is 6 years old, but he knows that when someone gives him a pocket money, like maybe some 10 rupee, 20 rupee, it goes into his piggy bank. He knows from piggy bank, mama will put in his bank account, and he knows that mama will invest in mutual funds. He doesn't know what are mutual funds, but that's what it happens because, that's the conversation that we have, or maybe he must have sometimes overheard me talking to someone.
So it inspired him.
It is something that they understand. And today's generation is very smart. It's not like how we were in our age. So, coming back to your question, one advice for parents I would like to say is um children education, inflation is at its peak. The normal inflation on an average would be 6 to 7%, but education inflation is on an average 10 to 12%. So coming back to this, if you want to make sure that tomorrow, if your child wants to pursue, could be a medical seat or an engineering, or if you want to send a child abroad, today's cost is nothing less than 80 lakhs to 1 crore. So you need to consider, with the help of inflation, how much actual corpus you might need when your child is 18 or 21. And it's always good to start early,
Mm-hmm.
because more the time you have, the power of compounding works in your favor, as a
Right.
as a term of investments. So I started for my son when he was, I think, a week old. And luckily COVID hit and we couldn't spend money on his first birthday, so I took all that money from my husband and I invested back in markets. And today, on his every birthday, we try and step up his SIPs, because as parent, we try to do best for our kids throughout the year. It's not that you buy one birthday dress for your
Yeah.
child, the way
And
we used to
that's
be, uh, you know, the way we were brought up.
great.
And inflation is very high. The cost of education is very much. So if you have to bridge the gap between all these things, it's always good to start early. And sometimes what happens is parents even create a separate account, and the money is just lying idle into the child's account. So I feel that as a parent, you should put that mind forward. Even if you have a girl child, Sukanya Samruddhi is a good option, wherein you can invest for your girl child. If you generally invest in PPF, Sukanya Samruddhi can give you 0.5%. A small amount can go into that.
What is that, Sukanya Samruddhi?
It is an investment option. It's government backed, and you can invest, and it gives you a tax rebate under Section 80C.
It's a mutual fund?
No, no, no. It's a scheme,
Okay,
Sukanya
it's a scheme.
Samruddhi
All right.
Yojana. So that could be one of the option. Another option could be you can start some SIPs in mutual fund. You can also open a demat account and buy some shares,
Yeah.
because you've seen how equity markets have performed in last
Yes.
15 years, 20 years. That can also adds up to the overall growth.
So your
But
advice to
starting early is important.
parents would be to start early
Yeah.
and plan for your kids' future to
And what
avoid.
is important is to plan as per your financial goal. Again, why I would like to again reiterate on the same topic is, When it comes to child's education and your retirement, most of the times these two are at a similar time, and as an Indian family or as an Indian parent, you would like to pull out whatever you have just so that your child can go for a better education. So if you have a separate goal in the beginning and try to invest separately, it doesn't hamper your retirement corpus.
Okay, that is an important
Yeah.
point that everyone must plan in advance for. Yeah. Great. I think it's been really informative for all the viewers who are watching us and for me as well. So I guess now we will move to a more fast-paced segment, which is the rapid fire round.
I think before you move to that, I would like to highlight on three areas of personal finance,
Yes.
when you want to start your journey. First, as I mentioned, is contingency fund. Okay.
Yes.
Uh, 3 to 6 months of your fixed expenditure needs to be invested separately so that in case of an emergency, you're not touching your long-term savings or
Right. And you
investments,
can
right?
quickly liquidate it.
Yeah, that's one thing. Second thing is risk management. This is what we've not spoken in our dialogue today. When I say about risk management, make sure that you have an adequate insurance. Okay. Today the cost of medical inflation is very high.
Yeah.
So an average cost of surgery today, if say it is 5 lakh, after 5 years it will go up to 10 lakh or 15 lakh. So make sure that you have an adequate health insurance, because these are few loopholes, which try to kind of have a major impact on your investment. Because I get a lot of clients who don't have an health insurance. If any medical emergency comes up, they would like to pull out from their long-term savings and investing.
Okay.
So having an adequate health insurance. The third is, if you are a major breadwinner of the family, irrespective you're a man or a woman, and if you feel that your family is totally dependent on you to take care of their basic expenditure, make sure that you have a term insurance. Okay.
Okay. And for the viewers, could you elaborate on term insurance?
So what is a term insurance is basically you pay a smaller premium for a bigger cover. Again, there is a human life value calculation depending on your assets and liabilities. How much of the insurance is needed. Now, for example, if you have high on loans or if you have kids and if their education is pending, then depending on all those calculations, if your lifestyle is expenditure is high, depending on those calculations, we suggest our client. Again, it again varies from case to case whether you should have what cover. It could be 1 crore, 2 crore, 3 cover,
Term
3
insurance is
crore.
life insurance.
It's a life insurance. It's a part of life insurance wherein you pay a smaller premium for a bigger cover.
Okay.
And how it works is, in case of death of the policy holder, your family will get a bigger corpus, so which plays a key role in terms of managing the overall
Right.
expenditure after the demise.
What would be the minimum insurance in terms of health insurance that in today's scenario a person should have?
I think minimum should be at least 15 to 20 lakhs.
Yeah,
Okay.
given the
And
higher cost of medical.
correct. And the best part of these current health insurances, uh, now there are features wherein in case if you don't use this product,
Yeah, it compounds.
yeah,
Yeah.
it kind of, carry forwards.
Yes.
So your 10 lakh becomes 20 lakh, it becomes 30 lakh. So it really helps in terms of, because at least that can take care of the inflation factor of the medical
Yeah.
area.
Yeah.
Coming back to life insurance, when I say life insurance, one piece of advice, not to mix your insurance as well along with your investments, because when you do so, neither you get a sufficient cover nor you get a sufficient return.
Okay.
So term insurance is key if you're a major breadwinner, and cover again depends on your
Yeah.
how much of thing
Great.
you have. So once your basic base is covered, when I say base, your contingency and your risk management, that is when you start thinking about how should I compound and grow my money now. So that's where you can invest into different areas. It could be stocks, it could be bonds, it could be mutual funds, it could be real estate, etc., etc.
Okay.
Again depending on your risk appetite, your time frame. And once that is done, most important area that most of us forget is estate planning, because we create a corpus, but what after that, uh, how is the transmission supposed to happen from you to the next generation? So creation of will is very important.
Hmm.
So that again depends
So
on
four
your
things:
assets. Yeah.
contingency plan, 6 to 7 months; health insurance, minimum 15 to 20 lakhs. Third would be a term insurance if
Yes.
you're the sole breadwinner
Yeah.
of the family, and fourth will be how will you carry your assets forward. Yeah, and that could be in the form of will and so on.
Yeah.
Great.
So that's basically for transmission. If you
For
want to
transmission.
so if, for example, if you want to inherit from your parents to you, it's always good because we have seen cases wherein um the sole breadwinner could be, for example, the client is dead and the kids are not even aware of what he had, and then there is a lot of running around,
Mm.
trying to understand whether my father had maybe FDs or where he had real estate. So it's always good if things are written down.
Mm.
Make sure that your nominations are clear. Most of the times, our clients have had tough time seeking that, the maybe the person had FDs, but there was no nomination.
Ah, okay.
So all
That
these
is
things,
sad.
smaller things, are very important uh,
Great.
in your journey.
Yeah.
Yes.
Oh, this summary is, I think, the highlight, and I think that really educates everyone. Yeah. Well, let's move on to the rapid fire segment. Okay. So, as most of us are aware that in the western part of the world, there is a big war going on between US, Israel, and Iran. So, as an Indian, what should we do right now? Do you advise investing? How should the path look like?
So see, in the journey of finance, you see a lot of hurdles, and these hurdles should be considered in terms of, how you can be an opportunist in these kind of situation. Again, as far as you know that, your goals are long run, and if situations like this gives you an opportunity to invest, because most of the times, when there's a negative news or irrespective with geopolitical pressure, you always see that markets reacting to it. In fact, since the war is on, we've seen almost a correction of 5 to 6,000 points in Sensex.
Mm.
So if you are an individual who's sure that I have money, I can invest now, and I may need it in next maybe 4 years, 5 years, 7 years, it's an opportunity for you to create wealth.
In what markets would you?
Now, in the current scenario, mid and small caps are down by flat 10 to 15%. So you're already getting these at a discount.
Hmm.
So if you invest now, definitely, and when markets bounce back, you're 15% up on these kind of areas. So you can invest into mid and small caps. If you're someone who want to invest, but again, you're very cautious, something which is really doing well at the current situation is a multi-asset kind of an allocation fund,
Mhm.
which invests into commodities, 15 to 20%, which invest 50% into equities, 30-40% into debt, and the rest into international equities. So again, depending on what is your tenure, you need
Of
to. But
investing.
definitely, uh, we get a lot of panic calls. Clients are worried because no one wants to see their investments down negative, right? But what we try and educate them, again, this is a phase wherein you need to test and educate your clients on why this situation happens. And this is not the first situation for India. We've seen multiple situations like this, and we've always seen how the markets have bounced back, when we are out of that situation.
So your advice would
So,
be to invest in mid cap and small cap
yeah, so
in right now's current
correct, in
time.
the current scenario, since they are the first thing that falls,
Right.
because small caps are smaller companies, so any panic, any negative news, these are the ones which gets affected first, right? Then the mid caps. Large caps are more or the less stable.
Right.
So depending on your risk appetite, you can choose on these kind of categories.
How does the top 1% people in the world invest? And by 1%, I mean the people who have the cream of wealth, abundance of wealth.
What I've observed is money makes more money, right? And if you have money and if you are investing and just keeping aside all the noises around you, that's when you can create wealth. So, wealth creation is all about patience, and it's all about making sure that whatever that you are investing is backed with a purpose, and that's how the compounding works, and that's how you can create
Okay.
more money.
Wow, that's
Mhm.
great. These days on the internet, there are many fake online gurus who give advices on finances and so on. How will one recognize such fake finance gurus?
Since the influencer marketing is on, we see a lot of influencers who try to pretend that they are financial influencers. What is important is to understand their credibility, whether they are qualified. Now, in the current scenario, SEBI, which is our regulator, has been very stringent in terms of, putting some sort of cautions or some sort of, so if say for example, if you are a mutual fund distributor, you have to mention that you are an AMFI registered mutual fund distributor. If you are an RI, you have to mention that. So understanding the credibility of the person that you want to trust,
Mm-hmm.
because again, when it comes to finance, it's all about trust, right? You need
Yeah,
to understand what the person is qualified to in order to kind of advise you on.
right. And is there any website where if a person is registered, that website will show them?
It depends on, no, there's no website as such, but what is important is you need to check their own website whether they are mentioning that they are qualified with some sort of designation, like it could be a AMFI registered mutual fund distributor or a certified financial planner or a chartered wealth manager, something that way. You need
Okay,
to make sure that the person is really qualified to give you an advice.
right. And last but not least, this might be a very weird question, but I'll still gonna go anyway. How about if in India everyone is financially literate and everyone is making profits and earning good amount, all at a very close balance? How would the markets look like if everyone is earning well and investing well and everyone is financially literate and everyone is making equal amount of money almost? Will the stocks fall down? Will they go up?
See, again, stock market is all about demand and supply. So the moment you are selling, that means, you feel that there's something wrong with the company. And that's when the opposite person is buying because they might feel that, maybe that stock is going to do well. So it's all about buying and selling. That's how the entire fluctuation happens, right? Current scenario, a lot of foreign institutional investors are pulling out money. That's where you see, Sensex coming down by 1,000 points, 2,000 points, again because of the geopolitical pressure. So what I would feel is ki today's scenario, lot of Indians or lot of retail individuals are investing, and that's how we have the strongest SIP book size, and we are investing right back into the market.
Okay.
So it's not like before, and with the current, the way the literacy is good compared to what it was before, I think we are not very dependent on institutional investors, and it's growing.
Okay.
Yeah.
So, moving on to the financial segment of our podcast, let us start. Yeah, are you ready? Okay, great. One financial habit that everyone must build before they are 30 years of age.
I think it should be starting early, and it should not be 30, in their early 20s, I would say.
Okay. One mindset shift that helps people into, being more disciplined in terms of finances.
So I think the biggest mindset shift is, money is not grown overnight, right? You need to spend, and you need to remain invested for a long time to create wealth.
Okay.
So wealth creation takes time.
One book or a resource that you would recommend to our viewers that can help them change their way they look at money.
I think Rich Dad Poor Dad.
Okay. One money myth that you would wish people would stop believing.
Most of individuals believe that you need to have a lot of money to start investing. So I think starting small is something which you should know, and you should be starting.
Okay. If someone wants to start their investment journey today, what is the first step that they should do immediately?
Understand your goals, okay, the purpose behind investing, and also your risk appetite.
Okay. One step that many people make that can destroy their long term wealth.
Trying to withdraw investments in the early stage, getting worried looking at the market volatility, So I think understanding where you're investing is the key, so that you can take the right investment product or invest in the right product.
Okay. Rich mindset versus poor mindset in one sentence.
Rich mindset works more on building wealth. Poor mindset works more on showing that you're rich, you know, and trying and investing into maybe taking impulse decisions.
Mhm.
Yeah.
One best financial advice that you have ever received in your life.
I think one of the biggest financial advice I would say I have received is um, spreading literacy. I would come back to that again because um, many people have thanked me because, I have created that impact in their life, and that's really visible.
Okay, that is great. So, if you had to start your journey again back from 25 years of age, what is that one thing that you would do differently?
Well, I started way before that. I started when I was 19.
Okay, so if you had to start
And
from 19.
I would have started, maybe I would have started building my business when I was 19.
Okay, so that is the one thing you would
Yeah.
change. Love that mindset. That is great. So, I think we are at the end of our rapid fire round, and I've asked everything I wanted to ask you, and also to make sure that the feedback we got from our viewers on this subject is all taken care of. However, is there one last closing statement that you would like to share with the audience?
Well, I would like to share one story before we close this. Uh, when I was working in Mumbai, and I had this client. So basically, this client was a vegetable vendor.
Mhm.
Now, most of us would think that how much will a vegetable vendor invest? On uh, an average SIP which an individual would do is, I'm talking about a salaried. An average salaried will not be more than 10 to 15,000 a month, right? But a vegetable vendor had his monthly SIP of 5,000. So that's something very inspiring. And when I say monthly 5,000, so it's almost a lakh and a half. Sorry, daily 1,000, daily 5,000. So, and how the calculation was on a daily basis, because depending on, what vegetables he used to receive and what he used to sell. So he always wanted to put aside his profits of 5,000 a day. So that's the power of investing, and that's how small it is not important whether you are doing a corporate job, or if you're a businessman, or if whatever you do in life. What is important is, what do you do at the end when it comes to your finance, or how do you manage your money, irrespective. So even a smaller amount can create a huge difference.
Great. Yeah, that is very insightful. I'm sure that has sparked an interest in everyone to invest early in their lives and smartly, of course. So thank you so much for sharing such insightful knowledge with all of us. And again, thank you so much. So, to all our viewers, we are now at the end of our podcast, and I really hope that our conversation today has helped, ignite that spark within you and has helped you in some way or the other. And if you feel that there is someone out there who really needs to listen to this conversation that can help them, then please do share it with them and definitely hit that subscribe button. So, until next time, take care. Thank you so much for watching. We hope you really enjoyed today's video, and for us to be able to get you such inspiring stories every day, make sure that you really hit that subscribe button today and now. And also, if this video was able to help you even a little bit in any area of your life, then please do share it with someone to whom it can also make an impact. Until then, drop in your comments as well so that we get feedback from you and we're able to improve and bring in the best content, because in the end, this is all just for you. So thank you and stay tuned.